Life Healthcare is one of the top 3 private hospital groups in South Africa with 64 facilities across South Africa. Initially known as Afrox Health, Life Healthcare was rebranded and relisted on the JSE in 2010. It has a market cap of around 31 billion rand, a price to earnings ratio of 23 and a dividend yield of 3.3%.
I'm absolutely gobsmacked at how well it's done. Because,
I thought I was misreading
that's correct.
Market cap.
Specifically here in the last couple of months, it's just gone from strength to strength to strength. Look, it has delivered well. And the other 2 groups we're going to talk about after the break, the other 2 big hospital groups have got debt-related issues, whereas they have almost none. So quite conservative. They've done lots of roll-up deals, buying a little clinic here, a little healthcare facility there, opening and expanding existing facilities, adding beds the whole time. So of the 3, it's actually smaller. It's got about half the revenue of the others, but it has a high enterprise value because it's observed to be a rapid grower in an industry that the global market wants more of.
Well, rapid grower, if its share price is anything to go by in terms of rapid elevation, I'd say. Stand back, Paul, you're in the way.
Yep.
Let's just have a look at this.
This is only 3 years since it's been relisted. Woof.
Well, there we go. Daniel, I hope you were in this one, or advise your clients to get into it.
We've had this for a long time. I mean, we've been holding Brimstone, so we had the stock out of that, and we obviously topped up. It's been a great performer for us. You can't fault this company. Their margins are significantly higher than the other 2 players. Their operations are managed superbly. Their efficiency rates with hospitals, their utilization rates, they've got an excellent distribution of hospitals. For example, in the smaller towns, to take advantage of the lower income medical aid users, like Discovery's Keycare, I think. I forget the name for a second.
Don't worry, and I can't help you here. So you're the strategist on this one.
So they get involved with network deals with the likes of Discovery. They make sure that their hospitals are being utilised efficiently. They also have a different pricing structure to the other hospital groups. They price predominantly on what's called an ARM method, alternative reimbursement model. So they basically get not a fixed price, but if you have fixed price and cost plus, it's somewhere in the middle. So if they manage their input costs correctly, which they are superb at doing, you can get much higher margins than on a cost plus basis.
All right, the question is, you've been accumulating, you've bought, etc., through Brimstone, but would you be buying at these levels, just under 32 Rand?
So the stock
I'm still with
moment,
Daniel. You look confused there. I'm
looking forward to his answer.
I want to hear. What is he going to be doing?
We'd be buying in a bit of a pullback.
You'd be buying into a pullback.
It's been superbly
top-ish,
strong.
yeah.
It's been superbly strong. I wouldn't say top-ish. I mean, like I said, you can't fault it. On a forward multiple, it's a bit cheaper. It's an 18. And cash flows are excellent. Growth is excellent. I mean, if you're looking for a safe stock in these turbulent times, Life Healthcare is one of the main places
Since
to
you were waiting for Daniel's answer, are you revising your position on Life Healthcare tomorrow?
Partly also what happened here is that there was a fair amount of stock around. So, there was the unbundling of the stake that Mvela had in it and so on and so forth. You mentioned Brimstone. So the relisting, the book build. So quite a lot of international investors got this. They saw how well it was produced at results. They decided to buy some more. So it's gotten on a nice roll, and it's probably being valued relative to some other global groups. But I think it is going to be a little trickier for them to do this. There is the regulatory issue around the National Health Initiative. On the whole, everybody seems to be feeling cheerful about it, but I would just be a little bit anxious that it can maintain this kind of stellar pace, perhaps not.
What could go wrong here? What could go wrong? Is it the regulatory environment that could suddenly turn upside down completely and we don't have clarity on anything?
Well, like I said at the beginning of the show, the regulatory issues are always an issue in the space. So something big could happen, but it's unlikely because
where the regulators lose their mind, effectively.
The main thing on the horizon is the National Health Insurance, which guys know about. There's a green paper out on it. They're putting it into pilot mode. The guys have factored that in. It's not a huge surprise. Possibly they've made an acquisition in India. That might not go as well as they thought. Maybe it will.
What are you concerned about? The cultural issues again? What is it in India that concerns you?
Once again, in terms of moving into another country, you're playing in a very different field, very, very, very different space. So it's not a case of taking a business model that works in one country and transplanting it to another country and just letting it run. So
you're still there. I forgot about you.
Now,
All right, tell me. So
I think
India, does that concern you?
Interesting thing that you raised that, because they put R1 billion in there. So, you know, it's a minority stake, so that is an anxiety. But then again, you know, India has all of the same challenges, all of the same dreadful public hospitals, so there's got to be scope for that at the top end of the market. I think that's a bad thing.
Can we go to hot or not on Life Healthcare at current levels? I'm putting in that caveat.
Current levels, I think the stock is still hot. It's still safe.
Still hot, still safe.
Yeah, and I'm going to
Paul?
give it the thumbs up too, hot on that. But I wouldn't say people should go in anticipating yet another, you know, 100% share price increase in the short term.